Hey, welcome back to the Daily Dive. Today we're chatting with Greg Johnson from Metallic Minerals. But before we get into it, you know the drill. Like, subscribe, and hit that notification bell, please. Hey, Greg, welcome to the dive.
Hey, great to be here. Thanks for having us.
Okay, so you have a great deal of history in mining. Let's start with, how do you evaluate the merits of a project?
Well, I started out my career with a major mining company, Placer Dome, which became Barrick Gold, and went on to co-found Nova Gold Resources. And kind of the cornerstone to our approach, which was successful in making a number of major large discoveries, is we're looking for things that have the potential to be a tier one asset, a world-class asset that a major mining company would be interested in. So how do we do that? We go looking for scale. We want to see a system that's measured in kilometers in terms of its footprint. We want to see a system that has economic concentrations of metals for the deposit model that we're looking for. And then ideally, we want to see that there's been a history in that region of a discovery of that style of deposit. So we're not exploring some place that's never found silver, for instance. And so when you put all those pieces together, it's not an easy ask, but we know that those are the ingredients that the majors are looking for. And if we can be successful in identifying those kinds of opportunities, we've got the chance to really create a huge amount of value, which the mining industry is kind of unique in the ability to take something from very early low valuations to something that can create massive value in a relatively short period of time.
Awesome. All right, so it's been a rough few weeks for gold investors. What do you think is driving the price action?
I think actually, if you back up, we saw a short term peak in the gold and silver price market and sentiment back in August. We've been seeing kind of a consolidation of that big move, really coming out of the March lows. And basically, the market has been digesting. This is a pretty normal thing. Gold and silver, the corrections can feel devastating, but when you look on a longer term chart, once you get into a major multi-year cycle, these are just blips. But I think we're still consolidating from those August highs. Sentiment got a bit too enthusiastic. We're now at a point where sentiment is getting pretty depressed. And these tend to be the times when the phone is ringing. What's wrong? How come the share price isn't moving? Those are the times that are often like, oh, okay, we must be getting pretty close here to a low. And I'm expecting to see gold and silver, really start to go into their next upward here, at any point. Silver has looked better than gold, but I think gold is doing what we would expect it to do. And I would expect that we're going to see a turn here as it starts to really, put in its kind of near-term lows.
Hmm. Okay, so do you think Biden's next round of stimulus is already baked into the price?
I think that the market is anticipating, but I don't think it is. If you look at the level of monetary creation worldwide, not just in the U.S., gold price, silver price, commodities have not caught up because it's staggering how much new money has been created. So I think it takes time. We see this current cycle that we're in as being very similar to the last cycle, which was 1999, 2001 was the consolidating low, and it had its run through 2007. We had the 2008 crash, but then the commodity space went on to put in a new high in 2011. So a 10-year bull market run. We see where we are today as perhaps being similar to 2002, 2003, early years in a new turn, but gold has put in a decisive low. Silver has put in a decisive low. We've seen copper and the other metals hit lows, and they're all starting to be very constructive. Higher highs, higher lows. They're doing exactly what you would expect in the early innings of a bull market.
So there's been some recent social media talk about squeezing the silver shorts. Do you see this as realistic given the overall size of the silver market?
I think it's a more challenging situation than the one stock scenarios that were so much in the media, because it's such a broader market and the nature of some of those short positions are offset against, they're hedged basically. And so I'm not sure that that's really going to be as effective. It could have a short-term nudge, but it's difficult in the commodity space, with the margin requirements and everything to really be truly short on these things. So we'll see how it plays out. I think it's supportive to new visibility to the precious metals market, particularly silver. And I think that, as I said, we're already in a market that appears to be, a new major uptrend. And I think on its own, it's going to go through these higher highs, higher lows. And I think, as you pointed out, with monetary creation, with fundamental values, with inflation expectations, I think metals are going to be a place to be really watching and get exposure to.
So, what other commodities do you like?
Well, we're more bullish silver than gold. We really like platinum in here. We saw platinum recently, just in the last couple of months, break out of a 12-year downtrend. So these are not the kind of chart patterns that happen every day when you have to wait a decade for something to make a major turn. But that was a decisive breakout up through $1,000 an ounce. It's now over $1,200 an ounce. Historically, platinum has been equal or higher priced than gold. And today, platinum is much lower priced than gold. So similar to silver, just a few months ago, it was extremely undervalued relative to gold. It's starting to get back to more normal values, but still is undervalued. We're also quite bullish on the base metals. Nickel very quietly hit a low and is now testing 6-year highs. And we think there's a potential we could see nickel move on to test the highs from 2011. Copper, it went under $2 not that long ago, and it's bouncing up towards 4. And so again, testing highs from the late 2000s, and we could see it go on to new highs here. The market really hasn't appreciated these moves, but the reality is the fundamentals are very bullish for the precious metals and particularly nickel and copper.
So, what countries do you think offer favorable risk reward for gold exploration?
I think when you look at this, you really have to factor in political risk. We are focused in North American jurisdictions because you have confidence. If you find a deposit, you're going to be able to develop it and turn it into a mine that will be able to operate. Permits might take a little longer, but once you get your permits, you're guaranteed to be able to run your operation. So I think the opportunities from our perspective, you have to, if you're going to assess a third world country, you really have to understand the ins and outs. So looking at a first world jurisdiction, you want to look at pockets of opportunity. I think the U.S. is undervalued for mining. I think outside of Nevada, most people really haven't thought about mining in the U.S., but the U.S. has a long history of mining in jurisdictions like the Stillwater District in Montana that our sister company is in, the La Plata Mining District in Colorado that Metallic Minerals is in. These are districts that have a storied history and endowment and meet the criteria I mentioned earlier of being kind of world-class in scale. And we're coming into these districts and doing new exploration for the first time in 50 years. Likewise, in Canada, the Yukon is undervalued relative to assets in, let's say, Ontario or Quebec. And it really isn't justified. The geologic endowment in the Yukon is really spectacular. There have been a number of huge historic discoveries as well as more recent discoveries. And in fact, in the Keno Hill Silver District where we are, recent discoveries there are demonstrating world-class potential. So I think these undervalued jurisdictions and safe jurisdictions like the US and Canada are really a place to look for value opportunities.
You are CEO of Metallic Minerals. Could you give us a 2-minute elevator pitch for the company?
Yeah, you bet. So we are silver focused. There's hundreds of gold companies. There aren't that many silver focused companies. We're exploration development. We have 2 key assets. We're in the high grade Keno Hill Silver District of the Yukon, and we're in the high grade La Plata Silver and Gold District in Colorado. We are next door to Alexco Resources in the Yukon, one of the world's highest grade silver producing mining operations. We've made recent discoveries on our half of the district that demonstrate not only high grade vein potential, but potential for large scale deposits that fit our business model. And it's an exciting time for Metallic Minerals to be one of the few low political risk, high potential silver explorer developers in the market.
All right. Well, thank you so much for coming on the show today and chatting with us, Greg.
Hey, it was a pleasure. Thank you so much for having us.
And for our viewers at home, don't forget to like, subscribe, hit that little notification bell. I'll see you next time on The Dive to talk all things small caps.